Hello everyone, this is Calvin Russell, CEO and founder of 850 Club Credit Consultation. Hope everyone's doing well today. Today we're going to talk about how to purchase a home even if you got a previous repossession on your credit report. And when I say previous, I'm talking like even if you just had a repossession like yesterday, okay? So there are some lenders out there that will give you a home mortgage, so let's talk about it, all right? Number one, for those who don't know, you guys know what a repossession is. That's when you're paying on a car note and for whatever reason things happen, you don't necessarily pay like we promised we would, and then all of a sudden, of course, we look outside, the car is gone. For those who don't know, my car was actually repossessed when I was 21. I'm 30 now, so I feel like I'm getting older. But either way, I had my car repossessed, and of course, that was at 21. 4 years later, when I was 25, my wife and I was able to close on our first home, okay? That repossession did play a small role, but keyword small. For those who don't know, it was unpaid. I'm not, advertising. I won't say advertise, but I won't necessarily say like don't try to do it on purpose, a repossession. It just so happened that banks will overlook it if you learn how to build your credit the right way, if you learn how to build around it. I've seen a lot of people, that are looking to improve their scores and stuff like that. And of course, trying to get stuff removed and stuff like that. Disputing and getting things removed and deleted, that's fine. The problem is that people miss the most important thing about credit, and that's actually building or rebuilding. If you do it the right way, like I teach my clients here at 850, we have a model and we're able to help our clients do this. And I bring this up because we just got one of our clients, well, we've had multiple clients get approved, but I never did a video on it because a lot of times people, if they have a bankruptcy, if they have a repossession, if they have an eviction, they think that they cannot go into home ownership, and you can. I promise you, you can if you build it the right way, okay? So, number one, what did he do? We got an account. First off, we made sure that we took care of everything else. What do I mean by that? We made sure that moving forward from the repossession, that you try to keep everything on time. That plays a major role. When you're talking about like a credit card, a commitment, you're paying, $25 a month, $30 a month, whatever the minimum payment is, right? That's not really a lot. That's not like a big commitment. When you're talking about getting a car, right? That's a bigger commitment because you're saying, hey, I promise I'll pay $300, $400, $450 a month, whatever, right? And of course, that plays a role. When you're talking about a mortgage, that's a 30-year commitment. So they want to make sure things are a certain way, okay? And they have strategies themselves to try to make sure, because they're all about the risk factor, right? So they look at other things. So of course, for those who don't know, a mortgage loan falls under what we call an installment account. For the most part, you have two accounts that are on your credit report. You have installment, and then of course you have revolving, okay? For those who don't know, revolving is the strongest type of account that you can have on your credit report. Why? Because revolving normally closes when you decide to close it. Normally, like this traditional revolving accounts, like a credit card, where for those who don't know, you don't have to close a credit card account if you don't want to, but you can have a credit card account open for years versus an installment account. It has an expiration, right? So at some point you're gonna be done paying on it. Auto loan, personal loan, student loan, mortgage loan. I know some of you guys have no interest in paying on your student loans. That's a whole nother video. So, but either way, so when they're looking at, okay, can we give this guy a mortgage, which is an installment account? And then let's look at all of his other installment accounts, the repossessions there. So now, guess what they're looking for? They're looking for any other installment accounts that you've had recently. And that could be, just so you guys know, yes, self-lender does qualify, right? But you can also have personal loans from a bank, credit builder loans, which I did a video on. And you got to be careful with the credit builder loans, by the way. So we'll talk about that a little bit later. Well, actually, there's a video on that. So, but you want to make sure that it's okay to kind of get one after a repossession. Of course, once you decide what you're going to do after a repossession, we have a video on that. That way you can get another car, right? If you need one. So, and then everything after that, it damn near has to be flawless. Because again, you're talking about a 30-year commitment. Not like we're buying a car, a 3 to 6 year commitment, or like a credit card where, you close it, right? But with when you're trying to get a mortgage, you have to make sure everything is taken care of, right? Make sure everything's paid on time. Make sure credit cards are not maxed the hell out, because I see that a lot. Make sure if you decide to become an authorized user, the person, they not maxing their card out, okay? And that you're properly building credit. What is properly building credit? Not saying yes to everybody that sends you something in the mail. Just a few people. It doesn't take a lot. We had a client where we opened an account for him. He was a 480. Then 3 months later, by that time he was like a 570. We got him another account, right? It was a credit card. And then the last account we got him, it was a high limit credit card. His limit was like $8,000 or something like that. That was 3 accounts. By that time, he was like a 670. This was within a 6-month time frame, 6 or 7 months. Okay. And so again, if you build your credit right, they will overlook a lot of things. Did you know that there are some lenders, if your score is over like 730, 740, they won't even look at your W-2s, okay? So there's a lot of things that kind of go into that. We talked about it before with cars. If your score is like over 650, 660, most lenders won't even look, they won't even ask for proof of income. So they ask for, it's not that they're looking for a gray area or looking for you to lie about your income. It's more so they can make sure that, hey, listen, this person pays their bills on time. We're not going to make their life any more difficult by adding all this extra documentation, okay? So what do you have to do? Let's go over the checklist again. Make sure that you properly rebuild your credit after repossession, which of course another installment account that counts is an auto loan. You can get a car after repossession, right after repossession. You got your car taken yesterday and then go get a car tomorrow, okay? But again, it's going to be a high interest rate. But then as you start to improve your score, that's what I tell people. Don't get hung up on interest rates. Things can be refinanced. The problem is that there's these windows of time, and like it's what I call windows of credit time. I should trademark that. But when in these windows of credit time, the score goes up, right? That's when you want to refinance the car, refinance the house, get a better credit card, right? Because you know this things can happen and the score can go back down, but people miss that window. I've had clients where the score goes up, it reaches like a very high point, and then something happens and it goes down. Now we got to wait till everything goes back up again to refinance that car, to get that mortgage loan. I had a client where she says, hey, I'm trying to buy a house, helped to get her score up. Everything was fine. We should have got that pre-approval right then. But something happened. It was an emergency. She had to use the credit card. Now she's struggling to try to pay that credit card back because of the emergency that happened. So things do happen, but you have to rebuild your credit right. And here at 850 Club, we know how to do that. And here's another thing, guys. You don't have to talk directly to me in order for that to be a certain way. I have a team of people, and they're trained. They know everything that's not everything that's in my head, but they know enough to get you where you need to be, where it's just like you're on the phone with me. Okay. So again, just kind of keep that in mind. But I'm going to show you guys, well, hopefully at the end, if he's cool with me doing it. We get a lot of client success stories, but some of them are not cool with having their, I won't say business out there, but everyone's not cool with, just saying, hey, I was working with Calvin and stuff like that. I have to respect that privacy. So, but hopefully he does. But if not, it's no big deal. I'll be able to still tell the story that you can own a home. And we got him approved for $175,000. Okay. And this was after a repossession that's unpaid that he had no intentions on paying, which, by the way, another lender did say, because we went to another lender at first, she mentioned that, yeah, I need you to get on a payment plan with that repossession. I was like, well, let me go call my other guy. He was like, man, that ain't nothing. And what lenders do, they will count this particular type of lender, he counts your bad debts against your debt to income. Not the whole amount, just 25% of the amount. So that means your buying power is a little bit lower because you got bad debt that you didn't pay. Okay. Now, some bad debts they can see, some bad debts they don't too much care about. And there are some bad debts that's like, because I know people pay people to try to get their student loans removed. Listen, people that own homes or that walk them through that process, you cannot buy a home with default student loans, regardless if it's on your credit report or not. Why? Because you're getting a government loan from and you owe the government. That's not going to work out well. Okay. Either way, if you guys like this video, like it. If you want to share it. And as always, be sure to subscribe because you have nothing but great content on the way. Thank you guys so much. Have a great day.